everyone. Welcome to this edition of your Daily 5, thanks to StockCharts and StockCharts TV. I am Mish Schneider, Chief Strategist of MarketGauge.com. And of course, we all know at this point how difficult the market has been, the varying opinions between recession, inflation, stagflation, the market's going to come back, the market's going to collapse. And so it's become a real dialogue with people stuck in the middle. And actually, what's really going on is that we have a range-bound market. I've shown you through different various means the 23-month moving average and how we're stuck, not really clearing it. So what I thought I would do today is, rather than get into all of that, based on that 23-month, I'm bringing you my top choices for shorts and longs, and they are based very much on where they are positioned relative to the 23 months. So obviously a short would be below, a long would be above, and that's a good line in the sand. So here's what I'm going to be covering today. I like Coty for Formula One and Biogen on the long side, short ARK through SARK, Etsy, retail, and then, yeah, IBM, which reported earnings. So let's go to the charts. Okay, so let's start with Coty Inc. Now, the staples are actually doing pretty well. In fact, Procter & Gamble reported earnings, and as of the early part of the day, it was up to 3%. And I've done an article on just the bullish momentum on compression of the overall consumer staples. And of course, that makes sense in current environment. If inflation got much crazier, they may be impacted, of course. But right now, a lot of the cost of goods have come down, except really when it comes to food. But even with that, people are going to places like Costco and Target and buying their staples there. But this is one that has more to do with makeup and fashion, which we know is generally recession proof, because no matter what, most people want to go out into the world looking decent. And I happen to like Coty. It's really been something that's been endorsed by Kim Kardashian. So in terms of social influencer and one who wears a lot of makeup, she's a great face for it. So also look at how it's actually performing relative to the market. So we've had a golden cross down here. Now, the problem is when you have a 50 across the 200 and the price is all the way up here, it's not necessarily a signal that I would take at these lofty levels. And also looking at the real motion indicator, we've been following along on the Bollinger Band, and it is possible that if this sells off back under, let's say, 1150, you might see actually this breakdown. But let's take a look here at the daily chart, because this is a weekly chart. And on the daily chart, you can see that it's hovering around that Bollinger Band, and the golden cross happened on the daily chart much earlier. We've already we failed to get through the Bollinger Band here, and now it's really a question of holding on to this 50-day moving average in momentum. This is our ACP plugins. However, obviously nothing is immune to the market, but if this got another move down closer to the 50-day moving average, or didn't even get there and got closer to 12, this could be an opportunity to buy a stock that, if the market holds up or comes back, I would say could easily outperform. The next one is a mega trend that I have been watching, and it's streaming, not like Netflix streaming, but more like global sports and music streaming. And Formula One has become extremely hot. Now, again, this is more, let's not buy today, but in preparation in case of. This is a stock, and again, we're looking at the daily, that's been holding the 50-day moving average, has a sideways compression. However, just broke the 50 on the momentum. So what I would say is this is one that I would keep on the radar to do one of two things. Either buy it if it comes back through the 50 against the 50-day moving average in price, and you can see it's setting up for an inside day as I'm speaking to you. Or if it continues to lose ground in momentum and it goes down to the 50-day moving average, that would be compelling. And otherwise, if we break down under there, then I would say you probably want to wait and see whether prices get back down around 61, 62. But again, you can see just in terms of overall performance, how much better it's doing than the general market. And the same thing is for my third pick, is in the pharma and the medical space. Biogen has been doing very well. This was a hot stock for a long time. What's interesting is if we go back a little bit here in history, we had a gap up and we never broke down under that gap at 250. Now we're at 297, again, big lofty price. And we've had a death cross actually in momentum, and we're below the 200. And these momentum indicators are great to look at. And yet we can see sometimes where the momentum can be behind the price, and sometimes the momentum can lead the price. So right now, considering how the market is having some trouble, if we assume that this is leading in terms of the momentum, if this holds around 290, great. But if it breaks down around 290, I would still say that any move down closer to 280 would probably look like a good buy opportunity. It's harder, of course, to find things on the long side right now because we are in a trading range. We've hit the top of the trading range in the SPY several times now. And so it would make perfect sense for us to see some level of correction. Now this is ARK, but we're going to look at, this is now into the shorts, we're going to look at SARK. And the reason why we're going to look at SARK is that it's the ultra short for ARK. Now, Cathie Wood, I don't like to say anything about anybody, bad or good, but I will say that she was just recently on TV, recently as of yesterday, touting that she was thinking that Tesla was going to go to 2,000, Bitcoin's going to 1,000,000. I mean, she's just really almost become clownish in her forecasts. And that's not the reason why I say go short, but ARK has definitely been underperforming. And in the big rally that it had off the lows of around 30, 31, it only got to 40, 41, which seemed like a big move up from the lows. But really, when you think about the fact that this was over 160 at some point, it seems kind of shallow. So now here we are, the SARK. This is the short. We've cleared the 50-day moving average. This would be what we call a recuperation phase. And we still have some resistance here. This high from April 6th at 43.34 kind of matches the high that we're seeing as I'm talking to you at 43.24. So that means to me that I would probably want to see this take out 43.34. And then you can have a pretty good risk down to the low of this day, say under 41. So to risk $2 on a $40 stock is not bad. And of course, if we're looking to make $4, that means we're saying, can this go up to this next level of resistance around 47, 48, or even 50? Yeah, that's where I would be taking profits. Also interesting here is the Bollinger Band on the momentum indicator. We've hit it, but we haven't gone through. I would anticipate if we take out that 43.34 that we will also clear the Bollinger Band, which means the momentum to the upside in the ultra short for ARK is picking up. The next one is a consumer stock. It just hasn't been doing very well at all. It was a hot stock for a long time, but now this is Etsy. Now, Etsy, I'm not sure when it reports earnings. I know a lot of the retail stocks haven't yet, but it's an online discretionary. So the staples have done well, but the discretionary has done relatively poorly. And you can see there's a lot of support down here at these recent lows. In fact, the low here that we made on April 12th was 99.41. The low here that we made back in March was at 99.24. So that, I mean, we could say double bottom, clearly. So that makes it kind of easy, though. Look, we're about to have a death cross here, but that would tell me we break down under these lows of 99.24. I see where if we look at a little bit of history here, we can easily hit down at around 87. And in terms of the risk on this, I'd probably just risk to the high of this day right here, over 105. So $6 to try to make 12, that would certainly be a good risk reward. And in terms of momentum, this is below the 200. You can see that we haven't quite had the death cross here in the momentum indicators, but the momentum is sideways, which means we have a long way to go before we would hit the Bollinger Bands here and then possibly start thinking mean reversion. So I like this one as a short. And the next one and the last one is IBM, which also reported earnings. Actually, the earnings weren't too bad, but the reaction was kind of poor. So expectations, earnings, and then forward guidance are three different things. We had the big move up after earnings, and look where it closed, down here. Couldn't get through the 50-day moving average. So that gives you a pretty good risk point to the high of yesterday, figure 130 to 131. And as we're looking at today right now, you can see the range has been really tight. So that tells me that based on the levels of yesterday under this 125, which right now it's trading at 125.87, under 125, I wouldn't worry too much about this Bollinger Band. You could probably risk to around 130, so figure about $5 or $6 risk. And just to look at some historical price action here, we were down at around 115, 116 back when we had that October low. So if you believe the market's going much lower, these three have a lot of downside room. And in terms of the long picks, obviously you want to be cautious if the market's going lower. But if the market holds, or we start to see some things going in a counter trend, those are also three really good areas to look at. And just one last comment, you can see this is breaking down under the 50, also a long way to go to the Bollinger Band. So that means this is hardly, just like what we looked at with Etsy, oversold. So I hope that gave you some good stock picks to look at over the next few days. I want to thank the team once again for having me on. Hope you all have a great day and a great weekend. Thanks so much for watching, and bye for now.